Moutai, a liquor brand from a small village in China's mountainous Guizhou province, has created one of the most incredible business miracles of our time. This 53% alcohol spirit, known as China's national liquor, sells for thousands of dollars per bottle for regular editions, while rare vintages can fetch tens of thousands. What makes this even more remarkable is where it comes from. Maotai can only be produced in the town of Moutai, just like champagne can only come from France's Champagne region. This geographic exclusivity has transformed a remote mountain village into one of China's wealthiest places. The per capita GDP of Moutai town reaches $310,000, more than 4 times the US national average. Everyone believed in one unbreakable rule about Maotai. It only goes up, especially before holidays. Every Dragon Boat Festival, Mid-Autumn Festival, and Chinese New Year, Feichen Maotai prices would rise like clockwork. This had become the most reliable investment strategy in the entire industry. But then, this sacred rule suddenly shattered. The wholesale price of 53 proof Feichen Maotai plummeted from $400 to $315, a drop of over 26%. The stock price crashed from its historical high of $380 to around $200, wiping out more than $200 billion in market value. Has the liquid gold myth of Maotai finally come to an end? The Dragon Boat Festival has always been peak season for liquor sales. In previous years, Moutai distributors would scramble to secure inventory because prices were guaranteed to rise. But the 2024 Dragon Boat Festival was completely different. Not only did 53 proof Feichen Maotai fail to increase in price, it actually dropped by over $60. Individual bottle prices fell from $400 to $50, while case prices dropped from $400 to $50. This marked the first time in Maotai's 20-plus years as a public company that prices fell during a traditional peak season. Even more surprising, this downward trend continued throughout the entire holiday period with no signs of recovery. How reliable had Maotai's pricing pattern been? From its 2001 IPO through 2023, Feichen Maotai prices increased before the Dragon Boat Festival, Mid-Autumn Festival, and Chinese New Year with nearly 100% certainty. Many investors treated this as a more reliable money-making opportunity than stocks. Buy before the holidays, sell after, and pocket the difference. This pattern was driven by extreme supply-demand imbalance. Maotai's annual production capacity grows by only 3 to 5%, while demand growth far exceeds these numbers. Especially from 2016 to 2021, explosive growth in premium consumption drove Maotai prices on a wild ride from hundreds to nearly $430 per bottle. Maotai's scarcity isn't artificially manufactured. This liquor can only be produced in Moutai town, just like champagne can only come from France's Champagne region. Each bottle requires specific red sorghum, undergoes 9 distillations, ages for 3 years, with the entire production cycle taking at least 5 years. The town of Maotai has become incredibly wealthy because of this bottle. This small village boasts a per capita GDP of $310,000, more than 4 times the US national average. A 7-story Maotai bottle sculpture stands in the town center, symbolizing the company's importance to the local community. This scarcity created a miracle. Regular Feichen Maotai sells for about $350, while vintage bottles can reach $40,000. In 2023, a bottle of 1970s Moutai sold at auction for a record-breaking $1.4 million. Now, this mythical pattern has been completely shattered. If the Dragon Boat Festival price drop could be explained as an anomaly, the Mid-Autumn Festival performance completely destroyed all illusions. Mid-Autumn Festival is the absolute peak season for liquor consumption, accounting for nearly 30% of annual sales. In previous years, Maotai prices would start climbing a month before Mid-Autumn, typically rising by $30 to $70. But 2024's Mid-Autumn Festival saw Maotai prices not only fail to rise, but continue falling. Case prices dropped below $30-$65, while individual bottles fell to $30-$40, compared to the previous year's $430 and $30.95 respectively. Maotai had dropped $65 to $55 within a single year. What does this mean? It means distributors who hoarded inventory expecting price increases were losing hundreds of dollars per bottle. The stock market reaction was even more dramatic. Maotai's stock price plunged continuously, falling from $230 to below $185, with the company losing hundreds of billions in market value in a single day. Investors who had treated Moutai as their safe deposit box watched their wealth evaporate before their eyes. Performance data was also deteriorating. Maotai's net profit growth dropped from over 25% in previous years to 14.67%, the lowest level in 3 years. More critically, Moutai began using volume increases to maintain performance. When prices couldn't go up, they relied on selling more quantity to pad the numbers. The problem with this strategy is obvious. When you start discounting and promoting, the luxury aura begins to fade. The most symbolic event occurred during this period. NTO replaced Moutai as the top holding of Chinese mutual funds. This change sent a clear message. The most professional investment institutions were voting with their feet, no longer believing in Moutai's story. Mutual fund holdings in Moutai decreased by 22.03%, with total holdings dropping to $63 billion. Where did this money go? It chased new energy, AI, and every other sector that seemed more promising. Moutai management finally couldn't sit still. Moutai did something it had never done before. Spent $8.6 billion buying back its own stock. This news stunned everyone. Previously, Moutai management had always remained calm about stock price fluctuations, believing that good companies don't need to prop up their stock prices. But this time was different. The $8.6 billion buyback was the largest in Moutai's history and the biggest in China's entire liquor industry. Moutai immediately began executing the buyback. On the first day, they spent nearly $430 million purchasing 200,000 shares at an average price of $215. This price was 43% below the historical high, meaning Moutai was essentially bottom fishing its own stock. But the market gave Moutai a cold response. After the buyback announcement, instead of rising, the stock price fell and continued declining for 5 straight days. This reaction revealed a harsh reality. Investors had lost confidence in Moutai. Even when the company itself was buying, the market wasn't convinced. Meanwhile, a deeper transformation was occurring. NAO replaced Moutai as the top holding of mutual funds, meaning those professional institutions managing trillions in assets were collectively abandoning Moutai and pivoting toward new energy and other emerging sectors. Since traditional approaches weren't working, Moutai began seeking new directions. Internationalization became one breakthrough. Maotai's export volume reached 2,100 tons with revenue exceeding $7 billion, hitting historic highs. Although small compared to the domestic revenue of over $200 billion, growth was rapid, with premium Moutai exports growing 40%. Youth-oriented initiatives also accelerated. Moutai collaborated on various crossover products. Moutai ice cream hit convenience stores at about $9 per box. When Moutai lattes launched at Luckin Coffee, social media exploded as young people lined up to try them. Moutai also partnered with Dove to launch Moutai chocolates priced between $5 and $10, which quickly sold out. These crossover products generated less than 0.3% of Maotai's total revenue, but their significance was enormous. They got young people talking about Moutai. However, the reality was problematic. Many young people who tried these products didn't like Maotai's taste, with some saying it tastes like pure alcohol. Moutai is also accelerating its international expansion. Currently available in over 70 countries, the brand remains relatively niche in overseas markets. Most foreign consumers know little about the brand, and Moutai enthusiasts are mainly Chinese diaspora communities. The most important change was a shift in mindset. Moutai lowered its revenue growth target from 15% to 9%, marking a first in company history. This adjustment seemed like giving up but was actually a return to realism. Rather than setting unattainable high targets, it's better to be practical and leave room for transformation. From high and mighty to actively seeking change, Moutai is undergoing an unprecedented transformation. But whether this transformation can succeed remains highly uncertain. Today's Moutai is like a fallen king, facing both the possibility of resurging and the risk of being permanently overtaken. Favorable factors do exist. The government has begun increasing consumption stimulus efforts, with various pro-consumption policies being introduced. If premium consumption truly recovers, Maotai as the industry leader would certainly benefit. Moreover, Maotai's brand strength remains powerful, and its position in China's premium liquor market cannot be shaken in the short term. Maotai's stock price has also fallen to a relatively safe level. Dropping from $380 to $200 represents a 50% decline that has released most of the risk. Some value investors are beginning to consider Moutai investment opportunities, believing current prices offer long-term allocation value. However, the challenges are equally severe. The biggest issue is the fundamental change in consumer behavior. In the past, many people bought Moutai for investment and wealth preservation. This financial attribute demand is disappearing. Moutai must prove its value as a consumer product all over again. The rise of younger consumer groups presents another test. The post-1980s and post-1990s generations have completely different perceptions of Moutai than their parents. They grew up during relatively difficult economic times and tend toward consumption downgrading. Where they might have bought luxury Moutai before, they now prefer beer. Moreover, young people are far less brand loyal than their parents, focusing more on value for money and actual experience. International market expansion also faces significant hurdles. Although Maotai has entered over 70 countries, brand recognition remains low. Many foreign consumers' first reaction after tasting Maotai is, "This just tastes like alcohol. I really don't understand what's special about it." The competitive environment is also deteriorating. Traditional rivals like Wuliangye and Jiananshan are intensifying their offensive, while emerging premium liquor brands are also gaining market share. Maotai's market position faces unprecedented pressure. Maotai is undergoing a painful but necessary transformation. From the always rising prices myth to facing growth difficulties, this isn't just an adjustment of prices and performance, but a reconstruction of its business model. In an era where consumption is returning to rationality, Maotai must answer a fundamental question. Besides scarcity and investment attributes, what other value can it provide to consumers? The answer probably lies not in how high prices can climb, but in how deep brand value can be cultivated. Truly great brands are never expensive because they're scarce, but precious because they're irreplaceable. Whether Maotai can complete this transformation and redefine its value in the new era will be a business story worth continuous attention.